Have you ever wondered what situations would warrant doing a reverse mortgage or where it would make sense? Today, I want to share with you 5 examples of when a reverse mortgage makes sense and also show you a real life example of some clients that I'm helping right now and tell you why Dave Ramsey is wrong about reverse mortgages. My name is Miles Pitcher. I'm the owner of Superior Lending here in Utah. I'm a loan officer, been in the business for 21 years. Here's an update on where rates are as of February 23rd. This is an inverse chart, and as the chart moves down, rates move up. You can see that our rates have been getting worse. This resistance line right here is really holding, but boy, it keeps getting tested. If we break down through that, our rates are going to continue getting worse, but we're happy that it's been holding that resistance line. So what's happening with rates? Why are things moving? We are watching very closely what happens with Russia, Ukraine. Biden put some sanctions in place today. They were less than what people were hoping for. They were a little softer. We know in March, the Federal Reserve is going to raise rates. We don't know how much exactly yet. We know that they have to do that to get inflation under control. Inflation is the enemy of mortgage rates. And we also know that the Federal Reserve is going to stop purchasing mortgage-backed securities in March. That has been helping the rates, but we know they're stopping, and then they are going to let those run off of their balance sheet. That means that they're holding the mortgage, and as people sell their homes or pay off the mortgage or refinance, they're going to let that money go, so it comes off of their balance sheet. That is something that hurts rates also. So that's what's going on right now. Just remember this: as the Federal Reserve gets inflation under control by raising the Fed funds rate, that is a good thing for mortgage rate. We know that in March, they are going to raise the rates, and clients and realtors are going to get hit with questions like what we do. Oh boy, the Fed raised rates. What has that done? Well, we're not directly tied to Fed funds rates. Understand that mortgage-backed securities are separate from that. We are really affected by what's happening with inflation. So today, let's talk about reverse mortgages, also known as a HECM, home equity conversion mortgage. These have been around for a long time. In the early days, it was kind of the wild, wild west. They sometimes have a bad reputation. There are myths about them, but there are a lot of things in place right now that really are there to protect our seniors and to make sure that the reverse mortgage is being done in the proper way and making sure that it fits for the situation. Dave Ramsey calls these a scam. Why does he call them a scam? Well, the fees are a little more expensive on them. They are one of the highest paying commissions for loan officers, but I can assure you, in the right situation, they are a massive help to some of our senior clients, and I'll share some of those with you. So what is a reverse mortgage? You can pause and read this definition, but one of the borrowers has to be over 62 years old. They basically use the equity in their home, and they need a sizable chunk of equity they use that equity to cover the interest that accrues in the loan. If you have a normal, regular mortgage, a conventional mortgage, you write out a check every month that pays your principal, your interest, sometimes your taxes and your insurance. With a reverse mortgage, you don't actually have to make a payment to a mortgage company. There's a lien on the property. It is there. What happens is the interest that accrues during the month is added to the loan balance. So every single month, your loan balance will grow a little bit. And so it uses that equity to cover the interest. Once the borrower passes away, moves out permanently, sells the home, the mortgage or the reverse mortgage is paid off and the lender recoups their money. There's a lot more details that go into it, but for today, we're just going to go with that simple explanation. Understand that a reverse mortgage can be used for refinances and purchases, both, and they're pretty cool. So let's look at 5 instances when they would make sense or be a great option. Number 1, the client is committed to living in the home for a long time. One of the biggest questions that always needs to be asked right up front is, how long do you plan on living in this home? Is this a home that fits your needs? Are there stairs that are going to be a problem for you? Maybe not right now, but in 3 years, maybe your knees or hips are going to go out and you need a different home. So we always want to make sure the client is going to be in the home for a while, being committed to living there. Like mentioned before, the fees are there. They do cost a bit more. And that is the reason why we want to make sure the client's going to live in that home for a while. Another situation where this makes sense is extra cash flow to cover daily expenses. It is sad when we find seniors who are struggling with cash flow. And this can be a great relief for them to not have to make that mortgage payment. Use the equity that's there to help cover to relieve them of having to pay a mortgage payment. The next one we see happen also is that a senior does not have the credit score to be able to qualify for buying the next home. Their credit score, through late payments, bills, collections, judgments, they're unable to qualify for a standard conventional loan. The other one we see is paying for an emergency. I had a client a few years back who had some health problems come up, emergencies. They also had an emergency where they needed to help out their divorced daughter. They ended up tapping and pulling money out of their retirement investments that was doing very, very well. It really put them in a lurch and a bind. And so this is a great way to be able to have access to funds to cover those emergencies and let your other investments remain in place. The last one we have not seen a lot, but it's an option, is that before you die, you want to be able to pass your inheritance to your kids. And that inheritance could be the equity in the home that you have. And you would like to draw that out and use it to give to your children. Those are 5 great examples or reasons when a reverse may be a solid option. Let me give you an example. I know there's a lot of small print here, but these 2 sisters came to me. They currently own a home and the home does not fit their needs in. They are making a mortgage payment on it. It has stairs. It is outdated and needs some repairs done on it. They cannot afford to cover the repairs. They also have had late payments on this home. So right now where the market is, they have acquired a bunch of equity in the home. The value has shot way up. So they, in addition to that mortgage with some late payments, they have maxed out their credit cards. They have some medical collections against them. They still have car payments. It's a very, very large burden on them. Because of these late payments, because of these collections, their credit scores have dropped down into the 500s, mid 500s. So here's the plan that we are doing with them and we are in the middle of right now. They are selling their old home. They will be able to capture that equity from selling the home, and they're going to use a portion of it to pay off a bunch of their debts. Definitely the credit cards, car payments. And obviously selling off the home will pay off the old mortgage. It's going to pretty much put them debt free at that point. Then there's going to be enough equity for them that they're going to be able to turn around and purchase this new home. It will be a patio home, no stairs. It's going to be in a 55 and older community. The HOA will take care of the yard for them. It's going to be a great situation for them. I hope you can see that for these 2 sisters, this is game changing. They are dropping off around $1,000 a month in monthly payments, plus not having to make a mortgage payment now. In total, it frees up around $2,200 to $2,400 a month for these 2 sisters. It's massive for them. They really have no other options than doing this. Dave Ramsey would tell them, oh, sell the home and go rent. Well, they could do that, but that rent obligation is going to continue for a long time. And I love to tell my clients, what is the interest rate on renting? It's 100%. Okay. It's expensive. This way, this is great for our clients and will really give them a long-term solution. I hope that makes sense. And you can see the power of this for helping out these clients. In visiting with them, the stress that they currently have. They were in tears when they were talking about how tough it is for them right now. It's almost to the point where they're unable to purchase food. So this is a big deal. It's a big help. And I would say, Dave Ramsey, this is going to save these two sisters and change their lives. Again, my name's Miles Pitcher. Let me know any questions you have. I hope this helps you out understanding scenarios, situations where a reverse mortgage makes sense. Have a great week. Remember, as you're watching this video, I'd love it if you'd give it a like and a follow or a subscribe. Have a great week.